Deciding between buying a new property or a resale one can be very tricky. With the Singapore property market being unpredictable in 2025, your choice could make a big difference in whether you profit or regret your decisions in the long run. There's no simple answer to this. Both new properties and resale homes have their own pros and cons, and it's important to figure out which one suits your financial goals, timeline, and view of the market. So the big question is, which one is safer to invest in right now in 2025? We're answering a big question many people are asking. With property prices for both new homes and resale homes going through the roof, which one is a better choice? I'd love to hear what you think, so drop a comment below. Right now, both new and resale properties are super high value right now, and the price difference between them is huge, about 58.5%. So it might seem easy to go for a resale home because it's cheaper, right? So hold on a second. While it's true that buying resale properties can save you money right away, there are some important differences and hidden opportunities you should think about before making your choice. And that's what we're going to explore today. So stick with me because I promise it will be worth your time, and together we're going to deep dive into a powerful tool that gives you data-driven insights to help you make better investment decisions and improve your lifestyle. So we're going to walk you through everything in a clear, easy to follow video, breaking down into 3 key parts using the REI method. Whether the market is booming or slowing down, these strategies will help you make smart decisions for long-term success. Number 1, capital appreciation versus immediate rental yield. Number 2, market sentiment and its impact in 2025. And number 3, the upfront cost and time horizon.
Hey, have you subscribed to our channel yet? Come on, help us here by clicking on the bell notification. This will help us a lot.
This is Coach Edmund, your Singapore Real Estate Insider. To better understand what's happening in the current property market, let's look at some real-life examples that show key trends in how people are buying and selling homes. The Singapore property market isn't just about prices, it's influenced by what buyers want, the economy, and the investment strategies. Case number 1, Midwood versus the Hillier. Let's start with these 2 projects, Midwood and the Hillier. When Midwood was launched in 2019, it got a lot of attention because it was priced at close to $1,700 per square foot, which was quite high for that time. This high price showed that there was actually a strong demand for new properties in that area. And just a short distance away, there was the Hillier, a resale property listed close to $1,300 per square foot, about 22% cheaper. This big price difference highlights how new properties often cost more than older ones. But why is that? The higher price of new properties like Midwood isn't just about the building itself. It's also things like modern amenities, the prestige of owning something new, and the potential of the property to increase in value over time. So buyers are always drawn to new developments because they tend to have updated designs, better layouts, and the latest technology. Plus, they often come with extra features like parks, gyms, and other community spaces, which makes the living experience more attractive. Now let's start use ProTrend to track the live data between Midwood as well as the Hillier. So we will actually put in the information for Midwood, and Midwood was actually launched back in 2019. Midwood. And we want to see a comparison between Midwood as well as Hillier. How has the per square foot difference? So you can see that for Midwood, it started at its launch about $1,643 per square foot. And let us compare to the Hillier, which is launched much earlier. Hillier. So we are going to input the same thing to see how they perform and match up with each other. So we can actually drag that. Hillier actually launched in 2012, but you can see the Hillier at the same point in time, it was actually trending about $1,386 per square foot, whereas the Midwood is much higher at $1,643 per square foot. And when we look at the price difference, it was almost 18.54%. So in this situation, a lot of people will always go for the cheaper option, which is the Hillier. Case number 2, Dairy Farm Residences versus Eco Sanctuary. When Dairy Farm Residences was first launched, the price for each square foot was about $1,500. This price reflects the special qualities of the property and the fact that it's located in a popular and growing area. So interested for a deeper dive, Well, you can join our live masterclass online and just comment masterclass below and I'll send you the details. Eco Century, a property that's already been sold and resold before, costs about $1,270 per square foot. This creates a big price difference of about 22.6% compared to newly launched properties. The reason for this is that many buyers believe new developments are a better long-term investments, so they're willing to pay a higher price. Okay, here we will be comparing the case study number 2, dairy farm residences as well as Eco Century. So the same concept, we're going to input the dairy farm residences, which is younger in terms of their trends for the last 5 years, and let's pull out the data. And where we want to compare is to Eco Century. So let us fit in the information as well for Eco Century. So you can see the Eco Century was launched back in 2012, and when the same time where Dairy Farm was launched, which is 2019, you can see even though Eco Century was trending about $1,269 per square foot, whereas Dairy Farm Residences was going for $1,563 per square foot, there is a price gap of almost 23.17%. In general, new properties tend to be priced 20% to 30% higher than resale homes. However, there's a change happening right now. In some areas, the price gap between new and resale homes is getting very small. Now, this shift is happening for several reasons. Number one, the resale market is getting more competitive, with sellers adjusting their prices because there's strong demand for new homes. Number two, there are more new developments being built in certain areas, so buyers may not feel as drawn to them and are starting to look at resale homes more. Number three, economic changes like higher interest rates are making buyers more careful. They are now focusing more on getting good value for their money rather than just buying the newest property. There is one key criteria we implement in our research called the support price. So if you're buying a property priced very close to one that is already 3 years old, yet you're entering at similar prices, what are your risks of acquiring this newer and younger property? Sellers might want to make the most out of their property value, especially with prices going up. Many homeowners are also looking to sell now to take advantage of their property's increased value. But also because new properties are likely to be more expensive, they also want to make a smart move. On the other hand, for developers, there's a bit of pressure. There are 43 planned projects with over 44,000 new units coming soon. Developers need to sell their existing condos within a 5 years period to avoid ABSD, so they are likely to offer lower prices to attract buyers. And this creates a great opportunity for buyers to find good deals. Because of this, we're seeing some of the best prices in recent years, which is great news for buyers and investors who want to get into the market. If you're looking at condos like Midwood, where prices are around $2,000 per square foot, it's important to think carefully. You want to compare this price to past resale values to make sure it's a good deal. So imagine you're a homeowner in Midwood. You bought your place for about $1,600 per square foot. Now, because of the timing, you're in a good position to make a profit. Let's say about $400,000 if you have a 1,000 square foot unit. This shows how buying at the right time at a lower price can lead to great returns. So even though Midwood launches at a higher per square foot compared to the Helia, and there is a price gap between both of them at 18.54%, what you want to see is how much the growth has become over time. And let us take a look at the Helia. Even though you could be buying at a lower PSF, what is the growth potential of about 13.49%? Whereas for Midwood, even though you may be buying it at a higher PSF, let us take a look at the growth factor. It's almost 17% versus 13.49%. So this gives you a very clear direction from a data analysis how one property, even though it is more expensive, the growth is what you want to look at. But what happens if the market drops? If you bought at a higher price like $2,000 per square foot and property values go down, you could lose money. This could be tough if you need to sell your place when the market is less favorable. On the other hand, those who bought at lower prices are in a stronger position, as they can still sell for a good price even if the market dips. Now let's compare two properties, Meadwood and Hill Heaven. Both have similar layouts, especially for the 3-bedroom units. Now this is important for potential buyers. If Hill Heaven becomes popular and is seen as a newer, better option, people might prefer it over Meadwood, even though the layouts are similar. People often like the newest option because they come with modern features as well as designs also. So if buyers start to choose Hill Heaven over Meadwood, the value of Meadwood could drop, especially if the two properties are seen as almost identical. If you're an investor, this means you should be careful about the price you pay when buying at the peak of the market. If you buy when prices are high and the property doesn't stand out compared to newer ones, it could be harder to sell it later without losing money. Whether you are drawn to the excitement of a brand new property like Hill Heaven or the reliability of an established one like Meadwood, the most important thing is to do your homework. Take time to research, check out the market trends, and visit the properties if you can. Because both new and resale homes offer unique different benefits, but the key is figuring out which one matches your goals and comfort with risk. So will you go for a fresh potential of a new home or the stability of a proven one? Whatever you decide, make sure it's a well-informed choice that sets you up for success in the long term. What advice is specific to your property needs? Well, simply pause the video and scan the QR code on your screen to get personalized guidance tailored to you. If you found today's tips useful, please show your support. Alright, hit the like button, subscribe, and tap the bell so you'll never miss an update. Your likes and comments really help this channel grow, and they keep allowing me to bring you useful tips for your property journey. And so, thanks for watching.